Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me, we have Ruth Crowell. She's the CEO of LBMA for an update on the gold market. Ruth, it's great to have you with me as always. Welcome back to Trade Talks.
Oh, thanks so much for having me again, Jill. Delighted to be here.
All right, and let's open up with a high-level review on the gold market, some of the size that you're taking a look at.
So we have record stocks in London in terms of holding. The amount of gold under the streets is 435 billion US dollars. And we've also seen the average daily gold volumes go up as well. And what's been interesting is we've seen in terms of not just London, but average daily volumes around the world that are increasing. If you compare the global gold market, which at this count is 144.8 billion for 2020 in terms of average daily volume, it's actually placed really nicely compared to other reserve assets like US Treasury bills and EU sovereign bonds. And part of this is the continued bull market that actually started well before COVID, but obviously is continuing on through. And certainly we've seen record volumes as well, just in terms of trading volumes in London, where on the 26th of May, we had 115 billion US dollars worth of gold traded. That's 67 million ounces of gold changing hands for you industry experts out there. And certainly that's something we're going to see continue as gold continues to be a safe haven during this troubled times.
And that's exactly what I wanted to follow up with. Are you still continuing to see it as a safe haven asset?
Absolutely. I think what's been interesting, because stocks have also been positive as well, which is not usually the case for gold, but there's continued to see gold as a go-to, particularly in the West, and the interest from an ETF perspective, from a US investor perspective, is continuing to grow. Different approaches when you come to Asia. I was actually speaking in Singapore this morning. I think it's one of the madness of this time that I'm speaking on, two different continents in the same day without the jet lag, but also talking in Asia how they've seen gold trading at a discount, and part of that is in terms of how investors approach gold in Asia. Certainly, it's seen as it's held for a rainy day. And there's definitely the view that that rainy day came. So there was a lot of selling coming out, which was driving the price down, particularly in China. That's leveled off a bit, but we're expecting when India comes out of lockdown for that to continue. But certainly from a London perspective, the volumes are continuing to go up, and it's something that we expect to continue throughout the year.
Let's talk about some of the challenges and solutions with the global gold market as it starts to move more towards digital settlement.
Sure. So I think the challenges you'll certainly have heard about in the news is about price dislocations and logistics. So if you're not familiar, gold actually travels by passenger aircraft. Now, as there's less people moving around the world, ourselves included, that means that there's less opportunities and less flights for gold to take cargo space on. However, the large stockpiles, actual record stockpiles in London and New York, are testament to logistics companies have come through this entire period. Metal has been delivered, it's continued to be delivered. There's just less flights for it to be on. The other challenge has been in terms of price dislocations. Now, some of this, certainly in New York, was partly because of rumor or belief that metal couldn't come into New York. But as I said, it actually has come through and hit those record numbers. The other aspect in Asia at a discount, as I mentioned, because of selling that's happening. So in terms of some of the solutions that we see, we always want to see opportunities to make the market more effective and more efficient. And what I think going forward, everyone agrees that the case for a truly global standard, so you're not having price dislocations happen because one regional hub prefers its gold in one shape compared to another. This is something we have championed for a while, but certainly there is added enthusiasm given the challenges that we've seen to date. I think turning to the digital side, because you asked me about that, we're also seeing how technology can make things more efficient, effective, and transparent, and really trying to put digital arms around the current settlement system and create a digital ecosystem so that you are making efficient and transparent the sort of life cycle of a gold bar, where it's dug out of the mine, where it goes refining, and then ultimately going into a bank's vault, so that you have that whole process documented, and that address the kind of key risks that we see. One is for fraud and or duplication, and then the other is making the provenance, where it came from, sort of the DNA of the gold, transparent to the downstream. So that's the other aspect we focus on, is how do you make that information valuable to those who are looking to sell the gold, and set up ecosystems or digital gold offerings. You've probably heard a lot about these in the last few years. There's been a lot of enthusiasm, certainly with crypto as well as blockchain, but there hasn't been a real getting off the ground of a lot of these projects because there is lacking a digital gold standard. And that's exactly what we're set up our digital task force to try to drive forward. So it's exciting. I think there's a lot of interest in gold, certainly at the moment, as it's playing that safe haven role. But I think the opportunity to bring cutting edge technology to the world's oldest currency will be very exciting going forward.
Yeah, Ruth, I do agree with you. I think it really is interesting and exciting to see how gold is becoming digitized, especially with the legacy that the asset class has. Let's move along to our next couple of slides here as we take a look at some data from LBMA.
Sure. I think looking at the data, as I was saying, with trading dislocations that are happening in New York versus London, you see actually London has surpassed New York in the last month or so. And that's probably something that's going to continue as the price dislocation continues on the COMEX. The reason for it is most global bullion market participants who trade long London and short in terms of New York are not seeing that as a safe hedge anymore because of what's happened over the last few months. So they've withdrawn some of those positions and they're hedging in different ways, or they're taking less positions. So from our side, we definitely want to support the market of finding efficient and effective solutions for local London. But it's been very interesting to track from a daily data perspective how those real shifts are happening between marketplaces. I think the other is looking at gold's liquidity in terms of, we can now measure from the daily data. It's something called Amyhood, which I didn't know much about until we started really getting into the analysis of the daily trade data. But this is an illiquidity index. So the smaller the number, the better, right? And you can see, like, through the crisis, liquidity got a bit worse, but it's now regained pre-crisis levels. Silver, not so much. I think there's still a further road to go there, but it is plateauing to some extent, and we'll continue to monitor that as we go forward.
Okay, Ruth, and let's wrap up here, learning more about LBMA trade data and how to get access to it.
Well, I think the main thing here is that if you're interested in precious metals or you're actively trading in precious metals, you're flying a bit blind if you don't have access to it. It's available direct from Nasdaq, or you can also get it now on Bloomberg, and you've got the pages there for all 4 metals, as well as all types of tenors at volume.
All right, Ruth, thanks so much as always for joining me on Trade Talks.
Thanks so much, Jill.
All right, and thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.